to this webinar on COVID-19, the consequences of government policy in Central and Southeastern Europe, being put on by the European Political Economy Project and the Southeast European Studies and Oxford program. We've got an hour and a half, but first I would like to turn over to Mr. Charles Enoch, my colleague at St. Antony's, who will introduce the program as a whole.
Thank you. Hello, everyone. Thank you, Daniel. My name is Charles Enoch. I'm the European Studies Centre Fellow in St. Antony's College in Oxford. And as is Daniel, I'm involved in the European Political Economy Project, so-called UPEP, at St. Antony's College. And welcome to this seminar on the political economy effects of COVID-19 on Eastern and Southeastern Europe. Thank you to the fellow panelists and to the audience for joining us. This is a joint seminar of UPEP and CSOCS, Southeast Europe Studies in Oxford. This is the second and last webinar we're holding this term on the COVID-19 pandemic. In the earlier seminar, which was hosted by CSOCS, was on the geopolitics of the pandemic. Just a couple of words on UPEP. The European Political Economy Project hosts conferences and events such as this and conducts research on issues related to the European political economy. Last January, we co-hosted with the European Studies Centre and the Europeum a conference on life outside the euro, monetary and financial issues in the EU periphery and beyond. In January 2021, we aim to co-host, whether physically or virtually, a conference on climate action in Europe in the run-up to COP26 in Glasgow. This will look at the political economy of climate change, including in the first part on some issues on agriculture, and then in the main part, some issues in the financing of climate change. We also plan to host several seminars, physical or virtual, in the coming Michaelmas term. And details of all the events can be found on the UPEP website. And with that, I hand you back to Daniel for this session. Thank you.
First, a bit of housekeeping. We have an hour and a half. The four panelists will each speak for about 10 minutes, followed by questions and answers. And you're requested to use the Q&A function of Zoom to do that. And now then relay your questions to the panelists, to them as a whole or to individuals as you wish. The event, I think, is being recorded, and eventually there will be a blog about this. The audience members will not be able to speak directly, but use the Q&A function, I should mention. And finally, we have to wrap up. I think Charles will provide a summary towards the end. So let me just remind us all of the theme here. We know that the human and economic impact of the COVID-19 pandemic has been really enormous and highly unpredictable, and a great shock in many areas, and provoked unprecedented government intervention, innovations, also stimulus in South and Central Europe as elsewhere. The crisis has revealed strengths and weaknesses, perhaps surprising ones, and it's also perhaps going to provoke a sort of structural shift, so we cannot go back to the status quo ante. So today we're going to be discussing some of the main features of the policy responses in countries of the region, to some extent comparing them, trying to review why different countries behave in different ways, with some sense of what's going to happen going forward, where this is going to create a realignment of political forces, a realignment of priorities, about, for example, the role of government, and also the integration of the region and beyond. So many topics, and we are delighted to have four panelists today who are not only distinguished, but also are very good speakers and very knowledgeable events in the region and their particular countries. and we're looking forward to a lively discussion from them and the audience. First, I'd like to ask Piroska Nagy-Mohacsi to start. Piroska is currently Program Director at the Institute for Global Affairs, the LSE. Before that, she was Policy Director at the European Bank for Reconstruction and Development. Many of you may know her from being one of the founders and leaders of the Vienna Initiative, starting in 2008, which coordinated policies across the region. And a very varied career, but I first met Piroska when she was working at the fund back in the 1980s and 90s. And so without more ado, please, over to you.
Thank you very much, Danielle. Thank you, and thank you, Charles, so much for inviting me and allowing me to participate in this panel. I'm very excited about it, and happy to kick off the discussion. I hope that I will be a little bit provocative so that we can have a good discussion. Going to the very beginning. Okay, so let me be in full transparency, just put out what will be my 5 key messages, points rather. One is that Central Eastern Europe has managed, so far at least, the whole pandemic crisis relatively better than Advanced Europe. And in my view, this will have consequences going forward. Moreover, I believe that as much as we cannot really make any forecasts, the uncertainties are unusually and sort of out of this world type high. The outlook also looks, in relative terms, quite favorable. Everything is relative, of course, when we talk about this pandemic. And I would say that it will further strengthen incumbent leaders and governments. Many of them, of course, as we know, are right-center nationalist governments. But I would like to qualify this a little bit further down on the basis of a couple of new research that we have at LSE. Then I would highlight, in response to some of the questions that we got before the panel, that it appears that at least now, there is no real appetite for big state in this part of the world, which is coming out of communism, of course, just 20, 25 years ago. And unfortunately, there is not too much appetite for expertise, more expertise science either. On the positive note, however, I will end that the sentiment has shifted in this part of the world region, just as in Advanced Europe, toward more EU cooperation. Although what exactly this would mean, we are unsure on the basis of the surveys that are available. So these are the key points. So Central Eastern Europe has managed the crisis better so far. Notwithstanding all the uncertainty about the numbers, everywhere we look, the excess deaths, the unexplained deaths, health-wise, it's just as big a problem in Eastern Central Europe as in some of the advanced economies. It is hard to lie too much about at least the ultimate terrible number of deaths, and it is considerably lower than what we see in Advanced Europe. Moreover, what is measurable in terms of the economic impact, there is less output decline. To be sure, of course, there is output decline, and the whole crisis is terrible. But we are talking about relative terms within advanced and emerging Europe. The little chart that I have here highlights, this is from the latest EU summer forecast, just published a few days ago, highlights the first quarter GDP growth, quote-unquote growth. I mean, most of the countries, of course, it's a decline, and it shows that the big and most of the highlighted in the bottom Central Eastern European countries are faring better than the EU average. Of course, one has to note that that 4 of the southern eastern countries, all are EU candidates, have now an IMF program. Now, why is this overall reasonably better performance? I think that a big reason is that it was a delayed hit for the region. There was a learning period, and that was a learning not only for the governments, but also for the population. That is a little bit also my personal survey in Poland and Hungary. People didn't trust the government when there were some noises about this not being a very important pandemic in the first round. They believed what they saw on the internet, they believed what was coming out from Austria and Italy, and they reacted. But then the government also reacted with a relatively early lockdown. So the time was not completely wasted to benefit from the delayed hit from advanced Europe. Lower population density seems to be, according to several papers, an important part, partly coming from the EBRD, importantly. And there is, at least in terms of enhancement effect, because not too much happening other than automatic stabilizers, there are fiscal packages in place. But I would say that more importantly, monetary policy, first time we see that in emerging countries, and it's not only for emerging Europe, but across the world, monetary policy in emerging countries has been able to become counter-cyclical in the context of the crisis, because it's a global crisis, and because, in my view, fundamentally, advanced country monetary quantitative easing and massive support, liquidity and otherwise, is spilling over, trickling down to emerging economies. With the big further interest rate cuts, of course, there's some places that are already negative, but there was room in some of the countries. This reducing interest rates enabled emerging market central banks to reduce interest and cut interest, and indeed, I think most of them have done that. But not only that, they have engaged in what you would call bread and butter quantitative easing, what we saw from advanced country governments. And they have not posed a risk on the exchange rate, they have not posed a risk on inflation. Well, this very difficult demand conditions, but it's not, as we know, of course, our classical emerging market crisis. It's not caused here, it's not caused anywhere, it's a global sudden stop, as the BIS calls. But be it as it may, I think this is a major turning point, and central banks in the region are really doing a lot. And so are now important reserve currency central banks. So the Fed has stepped up the game. They de facto have become the lender of last resort of the world, with extending the currency, not swaps, because that they do only to friendly trusted partners, but currency repos, at least basically to everybody, every monetary authorities around the world. This is unprecedented, that even just the announcement made, as some research shows, made the trick. Definitely the ECB currency swaps, the ECB, as Daniel recalled, we worked a lot with them in the global financial crisis, and they extended then repos to Poland and Hungary secretly almost, and turned some of it into actually a swap, which is of course a real thing. But now they stepped up a little bit and they offer currency swap, as I understand it, to EU members when they need it. So not only obviously the big advanced countries, but also emerging countries, but also outside the EU, outside, not EU, sorry, at the Eurozone, Croatia, Bulgaria. So this is a big change. Emerging markets and emerging European countries are able to put a counter-cyclical policy package without endangering inflationary and exchange rate, without negative inflation and exchange rate implications. Now, why the outlook? I would argue very cautiously that might be also not relative, not that bad. First of all, the region has a reasonably decent public debt level, which allows for a fiscal stimulus. And that, again, is confirmed, information from the IMF, EBRD. And monetary easing, I have already described, is expected from the ECB to continue. The ECB has made announcement to maintain and extend its major quantitative easing operations at least until the end of 2022. So these countries in our region can count on that. And we hope that the currency swaps repos continue. But beyond that, beyond these policy measures and the help of advanced country policy easing spillovers, there are benefits also from close economic links to Germany, which has managed the health crisis reasonably well and being able to now ease up. And obviously the biggest country, but also onshoring from China, which is inevitable. EU recovery funds also will be allocated disproportionately largely to Poland and Hungary, 10% of GDP, which is surprising in a sense, but they got it, and hopefully will use it better, despite the fact that they have not been very well impacted. So what are the political impacts? Number one, this is support for the existing parties. Here you see Mr. Orban congratulating Mr. Vučić on the brilliant victory at the presidential elections just a few weeks ago. Of course, since then we have seen a surge in infections and deaths, unfortunately, in that country. Confidence in government powers and perception personal governments is not very good. I'm not going to go into that, but that still holds. So should we worry? And this, I like to add to you two new studies. Maybe I focus not on mine, which is on the right-hand side, and you can read it separately, but a very fresh research from a colleague of mine on Hungary. They come up with the view that this is really not a very ideologized country. There is a hardcore Fidesz, but the rest of the people really don't give too much about the methods. And the problem is that, of course, there is no opposition to speak of. This is not compromised. There have been always very little trust in government, and that has not changed since the fall of the Berlin Wall. But there is one general theme, and we have to keep this mind, comes out very important research from Ivan Krashev and colleague, is that the region's countries, Hungary included, feel that the countries are second-class EU citizens. And this is what's behind the upheavals. But there is a lot of protest, some electoral wins of the opposition. So I am less optimistic than normally the case is, but we can discuss it. Now, question of impact number two, there was a question to the panel, more state or not, more expertise, a brilliant new research from ECFR, survey, and the research shows that there is no appetite for more higher government spending. Bulgaria and Poland were the members of the survey panel, and you see the blue is what would ask for more expenditure, and that's not the case in these countries. Trust in experts and authorities, as you see on the right-hand side in the blue, is very, very low. Sentiments in Europe, finally, and that's my last slide, is very interestingly, has taken a U-turn. At the beginning of the pandemic. There was a strong disenchantment with the EU's response. But now there is an expected realization that there are some limits to economic and political nationalism when you have a pandemic which doesn't know borders. So the latest research, again, from the same source, is that on average Europe actually thinks that coronavirus has made them more positive toward EU coordination. And within Poland and in Poland and Bulgaria, this is Poland even higher, 68%, Bulgaria a little bit lower, more skeptic, but still positive. It doesn't mean, in my view, that there will be more Europe of the form of giving Brussels more power. But there is a desire from the electorate, it seems, toward more cooperation of nation states. So that's for me, and I'm looking forward to the rest of the panel. And
thank you so much, Piroska. We turn now to Professor Kori Udovički from Serbia. She is the president of the governing board and chief economist of the Center for Advanced Economic Studies in Belgrade, which she founded, which is a think tank there. She's also a member, for example, of the United Nations High-Level Advisory Board on Economic and Social Affairs, besides her academic work. Previously, she was Deputy Prime Minister and Minister of Public Administration, Local Self-Government of the government of Serbia, working particularly on the reform of public administration. She's been Minister of Energy and Mines and Governor of the National Bank of Serbia, indeed the first woman governor. She had various other connections, UNDP and the like, and was an economist at the IMF. So please, we look forward to your remarks.
Thank you very much for having me on this panel. Hello. It's a pleasure to be able to share all of this information, and I found Mrs. Nagy-Mohacshi's information very interesting. I am not going to try to answer all the questions to the panel right now, maybe leave some to the discussion, but I think Serbia presents a very interesting economic case and somewhat different, although not fundamentally, from the countries in its region right now, because at least until 3 days ago, its perspective was a very optimistic one, although even then, we just finished writing a report and a study based on a big survey and analysis there, where we thought that things are actually less rosy than they looked even 3 days ago. And the forecast for Serbia, more or less a consensus by different international organizations, is about a -3% growth rate for 2020. And the impression was that it will actually get away relatively lightly, certainly compared to the West, from the impact of the crisis. Above all, Serbia doesn't have a particularly large tourism sector. It doesn't depend on it, although when you add the restaurants and cafes, it does end up being a good nearly 100,000 people. It also has actually a very large segment of the population in relative terms that live out of ICT and professional services, partly because of Belgrade. So it's about 230,000 people. So those are the two extremes. The IT and professionals can be, and our survey shows they have been relatively lightly affected, although more than one would have expected for ICT by all means, by the lockdown that Serbia had. Whereas, of course, the lockdown sectors that include restaurants, tourism, personal services, those are the most vulnerable population to begin with, as everywhere else. And of course, they were much more affected. However, and in the survey, we were focused on SMEs. It was really remarkable how optimistic people were. They were brushing off even those most of a total of all the SMEs. At most 5% said that they would even need debt relief, and even a smaller share would say real help in paying salaries and so on. Everybody thought they would weather the crisis and be back to normal in less than a year. And there is some truth to that. We analyzed carefully also how they managed their reserves and cash flows, and almost nobody was laid off, although probably that's only referring, or not probably, surely referring to the formal sector. Informal employees simply didn't work for the most part. There were some incentives in the government measures to actually keep employment on, but they don't seem to have affected too many firm decisions. The real reason why they really held on to employees was that Serbia has been growing lately and getting a growth momentum with which it entered into this crisis period, and the labor market is simply very tight. And people, I think we are coming to the conclusion that the economy is creating a dual system and a diversified system of incomes and reserves, where everybody has more than one job, everybody has two kinds of employees, because it's an economy that is growing after having been buffeted by so many crises and by so much mismanagement, that those enterprises that actually survive and that have gotten to the point of now being exporters, we're really impressed that a very large share, for example, of the manufacturing sector export, and many of them don't even use banking services. So it is all based on accumulated resilience and reserves. So, as I say, overall, it seemed that these 6 weeks of really not working and a couple more weeks of difficulties would be brushed off. I will say a few more words about the government and measures, and then focus on why the clouds are in fact gathering on the horizon, very much so. So the government measures were one of the largest packages in the wider region. Without the credit facilities, it amounted to about 7 percentage points of GDP of a fiscal deficit. The key measure, and it's an interesting measure to think about, was as a wage subsidy, a minimum wage subsidy, net minimum wage subsidy to all SMEs. Large companies didn't get it. They would get minimum wage net subsidy only for employees on furlough. Plus, of course, tax deferrals and a moratorium on bank debt, and 100 euros for every citizen, adult citizen. This was all pre-electoral as well. The package actually was truly implemented quite late. It was kind of announced relatively early. It took a long time for the government to actually make the decision, in my opinion, because of the extreme centralization of decision making. So when you have somebody too busy thinking about how to handle the lockdown and the health crisis, that person cannot be paying attention also to the economic measures. But it is really interesting that companies were weathering it, even so that the liquidity effect doesn't seem to have been so important. But of course, these subsidies were extremely helpful for SMEs, who are mostly anyway very labor intensive. Those that are not, that pay some leasing of trucks and so on, they were immediately in much more trouble, or whoever is renting space. Let us not forget that Eastern Europe, and especially the former Yugoslavs, everybody owns space. Dependence on rentals is very low, especially for SMEs again, or individuals. So that also helps. These government measures were totally not targeted. There was zero effort to target them, and they were costly. But since the government has undergone a very tough fiscal consolidation for several years, in my opinion, it's already for a while been, in fact, unnecessarily overly tight. And so that our debt has come down from peaking around 72% of GDP. It is now around 52% of GDP, and it is not really expected to get over 60 even after this year. Reserves, foreign reserves, if we can believe the National Bank, it has reduced the transparency of its data, are at an all-time peak. So doesn't, in my opinion, that doesn't quite make sense. But anyway, the sector is doing fine. It had been also cleaned up of non-performing loans and of illiquidity chains relatively shortly before the crisis. We just finally, after 30 years, had basically eliminated. I just looked myself. Anyway, we are now in trouble because of two reasons. One was clear even before 3 days ago, which is that in fact all of this is based on construction demand that will stop. Right now, okay, some government projects will still be on, but the private construction and foreign direct investment that as an investment mostly affected construction are all now under question. The government's policy is focused on attracting foreign direct investment. That will not change, but they might finally move their focus from what they consider to be auto industry, even when it is really very basic manufacturers. However, we now also have the effect of a criminally irresponsible loosening of any health restrictions in the weeks before the election. And Serbia is now suffering a very serious second serious peak. This, even if not a full lockdown is unlikely to result from it, will seriously affect the economy again. And now the reserves of the SMEs are already quite depleted. So with this I stop, but we can talk a little bit more about the health sector, which I think there are some interesting things to discuss about. Thank you.
Thank you, Kori. Let me now pass off to Dr. Christos Gortsos. He's professor of public economic law at the Law School of the National and Kapodistrian University of Athens. He's also associated with various other institutions, particularly the European Institute, University of Saarland, and also the University of Zurich. He, for example, is president of the European Banking Institute and other things, worked extensively in many areas of law, particularly relating to European issues. And I must mention that back in 2018, he was an academic visitor to the political economy of financial markets at St. Antony's. So welcome to another Antonine, Christos.
Thank you very much, Daniel. And thanks also to Charles for having invited me. It was a great time that we spent some 2 years ago, at Oxford, and I'm very much looking to come back there once the coronavirus situation has found a steady state, which will allow me to get back there. My presentation will be more centered to developments in the European Union. I will try to be brief, not exceeding the 10 minutes, which is my slot. But again, I would like to point on some issues referring mainly to the monetary policy that has been conducted by the ECB. It was referred before, it was a benchmark for other countries, in Europe. And also to speak about some developments on the front of prudential banking supervision and regulation, because this is the field in which I can identify in the financial sector the most important threats to financial stability in the months and the years to come. I have made quite an extensive presentation, which I will not go through the entire of that. It is structured in these 3 parts: general overview, monetary policy measures, and then financial stability related measures, with some remarks. First of all, it was mentioned also before, if you see the reaction in terms of economic policy, I'm not speaking about health issues, you can find 3 pillars all over the world, more or less, consisting of fiscal stimuli, fiscal measures, emergency liquidity and monetary policy measures, monetary easing, and then measures in order to preserve financial stability on the one hand, and on the other hand, to apply to the extent possible some flexibility in the application of the rules which govern financial regulation, because this was deemed to be one of the necessary elements in order to allow credit institutions, mainly banks, to provide lending to the real sector of the economy. And as a matter of fact, this is the main dilemma that we are going to face in the months and the years to come. A second point that I would like to stress is that unlike the global financial crisis in 2007-2009, this time the level of coordination at global level was not so high. Yeah, I remember 2008, dealing with the crisis at that time was to a certain extent assigned to the G20, to the Financial Stability Board when it came to financial regulation. And the role of international fora at that time was very prominent. That was not the case this time. It is striking to see that the Basel Committee, which is responsible for banking regulation, has only issued some very marginal, I would say, proposals in April 2020, and then silence. The Financial Stability Board has not been as bold as it was in 2008, 2009. The G20 did not make any news during this period of time. Even the BIS was more or less silent. I would say that times are different. Yeah, the level of global cooperation this time is not as bold as it was during the last crisis. We can keep that as a point of discussion. And again, if I were to compare that crisis with this crisis from a financial economic point of view, first of all, this time it's not for the financial system to blame, it's not for the banks to blame. Yeah, this time we can say that it was more or less a black swan event. Yeah, it was an unexpected event to a certain extent, and in any case, it was not centered to the banking system. It was not the capital markets failures and banking failures this time. To a certain extent, banks during this crisis, on average, are better capitalized and are in a better liquidity condition than they were at that time. And the first round focus this time was not to rescue banks. It was not to provide to provide state aid to bail out banks or insurance companies like in 2008. It is on the rescue of companies of the real sector of the economy. So that is a bold difference between that crisis back 12 years ago and the crisis in our days. Now, my view, you may fully disagree with this, and potentially the expectations were that the European Union would have had a more decisive stance. My view is that the European Union has reacted, unlike the international scene. Yeah? In the European Union, we can identify a consistent strategy, yeah? Coordinated among the European institutions. I would say with a predominant role of the European Central Bank in its multiple roles as a banking supervisor, as a monetary authority, of course, in the field of macroprudential oversight within the European Systemic Risk Board, the other European institutions, the European Commission has taken bold decisions. The expectations were high. I can fully understand it. And especially when you come to countries which were affected more severely by this crisis, disproportionately with others, like Italy or Spain, yeah, one would have expected that, especially in the field of fiscal coordination, the reaction would have been bolder. But this is not to deny the fact that some level of interaction between member states has been evident during this crisis. And I would say that unlike the crisis of 2010, the fiscal crisis, when Greece at that time was at the center, the reaction was also very, very prompt because the instruments were there. I remind you that back in 2010, the financing of Greece at that time the instruments for financing Greece were not there. This time you had instruments, you had to apply flexibility to certain rules, but you had the instrumentarium in order to intervene. And then I spoke about the ECB. I can speak about the ECB as a macroprudential oversight authorities. This is very important in our days. We can discuss that. We had a lot of fiscal interventions, especially the application of certain flexibility in certain rules. For example, the Stability and Growth Pact has been interpreted in the most flexible way possible. Some measures have been taken for the short-term horizon, others have been taken for the medium-term horizon. If you see all the announcements and the measures, you believe that they are all taken as temporary measures, but this is not the case. Let me turn to the monetary policy of the ECB. And here I have the two elements of the uncompleted agenda. I would say this is the agenda on which everyone claims that more could have been done. When speaking about monetary policy, of course, it's very easy to say that the ECB has followed what all central banks all over the world, at least the ones in the larger economies, have done. Minimum interest rates for their main operations, and then unconventional monetary measures, including the establishment of a new asset purchase program, the Pandemic Emergency Purchase Program. Yeah, this is a new element in the arsenal of the ECB in order to deal with the crisis in our days. And then we have the macroprudential measures which have been taken and the microprudential measures that have been taken by the ECB and the European Banking Authority, and to a certain extent we had also some new regulations which deal with prudential banking rules. Here, I will not go into the details of the rules taken. I just want to mention that in our days, not only in Europe, but all over the world, the banks have been the beneficiaries of the implementation of the rules which were adopted back in 2010, 2011. Thank you very much for reminding me that my time is passing over, but please apply the same flexibility to me as you did with the previous speakers. I will not speak more than 3 minutes more. Now, the Basel III impact, as I call it, is very important because in that sense, banks have been built up buffers for the bad times, which they can use during the good times. And these were, they could build up buffers during the good times in order to use them during crisis. And that was exactly the time when banks could use the buffers they have built in order to be able to provide lending to the real sector of the economy under more flexible conditions. And this leads me to my conclusions. In the case of the monetary policy measures, the exit strategy is more or less predicted. Yeah, we don't know how long the crisis will last, but when the crisis is over, the flexibility in monetary policy will be over. Nevertheless, I should remind you that the ECB is calling the unconventional monetary policy measures as the temporary framework. And this temporary framework applies for the last 10 years. So I don't know what exactly temporary means in our times. The second element, nevertheless, is that when it comes to prudential rules, here the situation is much more complicated. And this complication is a byproduct of the fact that on one hand, we are expecting banks to support financially the real sector, and on the other hand, we need to preserve financial stability. And it's not my gloomy expectation. I see it again and again in all announcements by supervisory authorities, by the IMF, by international institutions, that the NPLs might be the main problem for the next years, the non-performing loans. Obviously, because several sectors of the economy and the companies operating there will be affected by the crisis. And the question now comes, to what extent the supervisory authorities and the regulatory authorities and the resolution authorities will interact in order to deal with the negative effects that may be evident, potentially not this year, but by the end of next year in the front of NPLs. Just to remind you that by December 2019, meaning 6 months ago, the ratio of the NPLs was the lowest on average in the European Union after the global financial crisis. And now they are peaking again. So if I can conclude with that, I fear that the problem of the NPLs will be the one for the next years in the financial system. Thank you very much.
Thank you so much for that wide-ranging discussion, which covered not only Central and Southeastern Europe, but also in Western Europe as well. And final panelist is Professor Kaloyan Simeonov. He is head of the Department of European Studies at Sofia University, St. Kliment, Ohridski. He is a very proficient author, prolific author and teacher, but also some practical and policy experience. He worked with the Ministry of Finance, the Council of Ministers of the Government, the Financial Supervision Commission, and also on various EU teams across the region. And so without more ado, please over to you, Kaloyan.
Thank you very much. Thank you for the invitation and also for the very interesting presentations. I hope that everything is clear on the screen and you can hear me well. I'm privileged to be the last one because I also can comment what already has been said by my colleagues. And I will, before going on my presentation, I will comment on some of the issues. There was one of the topic was should we have more Europe or less Europe after that crisis? I think it's now for the moment it's too early to say, because we don't know how long will be the crisis, and we don't still know how profound will be the crisis and how it will affect our economy, financial sector, society. But what was very interesting is that was that in the very first days of the crisis, there was so less Europe that I don't remember in my last 20 years. But what is happening now, and especially in the last weeks, I'm sorry, what is happening now in the last weeks, we see just the opposite. We see much more Europe. So it's very, I'm sorry for that. It's very difficult to see and to envisage what will be exactly the reality after, let's say, a few months, or let's say 1 month and 1 year or 2 years. So that's one very interesting question, and I thank very much our first colleague to raise it, because especially for me as a person looking on European affairs, it will be very interesting what will be the result of that crisis. I fully share also the view of my colleague from Greece, that this time the crisis is very different, because it is not financial crisis, but just the opposite. For the moment, I think the financial sector is one of the pillars for the stability of the system, of the economy. So the financial sector is supporting the economy and not vice versa, like it was 10 or 11 years ago. So before going to Bulgaria, I also want to touch upon one of the questions that was raised in the chat room, because after our presentation, we should start discussion. It was a very interesting question about should the current situation, the current crisis, lead to more cooperation in the region or not. My perception, what I look for the moment is that there is better cooperation, but mainly between EU member states. So there is, even in some cases, there are some types of divide, even if you are in the region, but if you are a EU member state or not, even for the tourism sector. So now I move to the presentation. I'll be very short, very few issues about Bulgaria. So we are a member of the EU since 2007. There is one very interesting issue that I want to touch upon. Bulgaria is not member of the euro area, but at least in our capital and in another capital in Croatia, we expect very soon, if it's possible in ours, news about the possible approval of ERM entry and the banking union entry that will be the most important step before taking part in the euro area. It is very interesting because in the last crisis, in the financial crisis, that was the beginning of the enlargement of the euro area with the Baltics. And we can see even a few weeks ago that there was start of negotiations with North Macedonia and Albania for membership in the EU. So we see that something like paradoxically, in times of crisis, sometimes the EU is much more willing to enlarge, and even the euro area is willing to enlarge, that in, let's say, normal times when you don't have such a crisis. What about the monetary policy in Bulgaria? I don't expect to change before euro area entry, because since more than 22 years we have a currency board. What is specific for Bulgaria is that before the crisis we have for more than 2 decades we have macroeconomic stability, low government debt to GDP. This is the third country after Estonia and Luxembourg, I think, that has the lowest government debt. Low government budget deficit, and even sometimes surpluses. What has been done so far in the country, of course, like in many countries, we have a single general portal about COVID and the measures that were taken. Here I list some of the measures. I don't read them because I will mention some of them in the next slides. But what is interesting is that in the majority of the countries in the region, but also in the EU, in Europe, the measures are quite similar. So there are very few measures that were taken by some member states, and there are very few measures that are not taken in one country or another and that were taken by the others. So the majority of the countries in Europe and in the region took more or less the same measures to protect the economy, and of course to safeguard also the financial system. One of the measures that were taken in Bulgaria was the adoption of a special law on state of emergency. One of the provisions there is saying that you cannot seize the property of somebody that didn't pay their debt during the time of this emergency situation. That I think it's quite normal. Interest-free credit guarantee program for those that are deprived for the opportunity to work. The private moratorium in the banking sector, so the opportunity to postpone the payment of principal and interest of loan was provided. Here you can see some of the peculiarities that it will be available until the end of this year, at least that kind of private moratorium, if there is no need to prolong it. Some of the measures were already mentioned by the previous speaker about the change of the capital buffers, dividend distribution policies. And here, this is my last slide. So I want to comment that at the beginning of the crisis, the main issue, especially in the financial sector and the real economy, was liquidity issue. So there was need of liquidity in order to prolong operation activities. More and more, the problem will be the issue of insolvency, and also, as my colleague mentioned, also the non-performing loans will increase. Hopefully that the last years the situation was quite the opposite, so they were decreasing and decreasing, and the banks are making buffers and buffers, so that was a good point. What is the problem is that the crisis affected different sectors and their workers differently. And of course, tourism, manufacturing are one of the sectors that are affected the most. But for example, we should also look that some sectors have even new opportunities, like fintech sector. I remember we have a meeting of 20 years ago of one master class that I have, and one of my colleagues from Belarus, he was so happy, and he said, "Look, guys! I mean, in the last 3 months, I enlarged the volume of the trade that I have 5 times, 500%." So, I mean, this could not happen in normal times. But of course, the majority of the people are affected negatively. And the problem is that those that are vulnerable, that means people that work with a low salary, and usually they don't work from home. And also, they became even much more vulnerable. And another problem is emergence of new vulnerable groups, for example, self-employed people, very, very often, of course, the increase of unemployment. But as I'm the last speaker in the panels, and this is the last slide, I want to finish with something positive. as well. So I think that crisis again shows how much important is the financial literacy. That means how people interact financially in normal times, in crisis times, because if you have now, if you have some savings, you can survive much better than if you don't have savings, and you have savings that can provide you the opportunity to live for 1 week or 3 months, but not more. And 3 positive points. So I think that this crisis will bring more digitalization, which is, I think it's good also for the green economy. So this is even a 4th one, if it's not the first one. More greener economy, especially in Europe. Another one is e-government. I don't know how it's in your countries in the region, but in Bulgaria, for example, for many years we speak about e-government, and now this is the real chance to make it much more. There are progress, but now I expect better progress, and I expect also more people to understand how much also important is financial literacy. Thank you very much for your attention.
Thank you for that wrapping up and some other perspectives. We already have a few questions, and I think perhaps I can combine some of these questions. For example, directed perhaps the first instance to Piroska, but also to others. Do you see that the relative success so far in dealing with the crisis may actually reduce the danger that the government wishes to expand its powers and become more authoritarian, that they don't actually have, there's less sense of crisis? On the other hand, is there perhaps a risk of some interested parties extending the atmosphere of crisis or special measures in order to solidify power?
Thank you very much, and just say that I really enjoyed the presentation of my panelist partners. That's been really great. I think that these center-rightist nationalist governments basically feel even more comfortable in their position as before. I don't think too much has changed. Let me speak about the case I'm following very closely, being originally from there, Hungary. The government already had absolute powers, yet the prime minister introduced emergency measures to have even more power, which now has been rescinded on schedule, which was a good surprise. They don't have to be worried. That's the bottom line, I think. I don't think there is too much of a risk of more power grab. They have enough. I mean, they have absolute powers in Hungary, a very strong majority in Poland. We just heard Serbia's case of the elections as well. So that would be my take. So they're very comfortable. I have, what was my point earlier, I am a little bit less worried than before based on some new research.
Kori, do you want to?
If I may comment, yes, on Serbia's unusual, at this point, I think it is a bit unusual situation because definitely up until a couple of weeks ago, including the elections, the crisis had served to consolidate power. The government was concerned about the pandemic related to the elections because the opposition was calling for a boycott. So I think it was extra important for them not to allow that a fear of the disease adds to a low turnout. But that card has been overplayed. Soccer games were played, and really simply the country forgot about being in a pandemic environment. And now there is the protests that are that some of you might have heard about come from a sense what happened when the need to start locking down at least some cities, including Belgrade, was announced, and people felt like this was too arbitrary. I mean, there is a very fundamental loss of trust. It's very hard to project what will this do in the longer term. This is not an organized movement. The opposition is literally almost non-existent. So ultimately, force is being used. So ultimately, it might end up consolidating power based on force. But I think it has seriously dented the authority that this current government had, because it's already. But the real issue is some alternative needs to emerge that really offers a realistic alternative before we can start talking about any kind of longer term weakening of actually, it's not just center right, it's populist. It's somewhat unexpected. 3 weeks ago, 4 weeks ago, it really seemed like this was now there to stay forever, very successfully. I think there is one very interesting aspect that the crisis is now bringing about exactly for populist right-wing governments, and it is the lack of appreciation for expertise is one of the very important hallmarks. And suddenly, it's a big question: are now the experts that were on the crisis board and that allowed the government to behave the way they did before the elections, have they further compromised expertise, or are they a proof that actually you need independent expertise to run sensitive situations well? This is now a very big question. I'm not ready to, I don't, there's no polls that I can refer to say how are people reading it. I'm done.
Daniel, can I add something to this, just on this expertise question? So we have one country where experts basically run policy, without going too much details. That's Sweden. And thus far, the result is not very favorable. And I don't want to go into, because obviously this is not our subject matter. But there, the experts basically run the thing. And the response, and that has not turned out well. So much more death than neighboring countries, and very little economic benefit from not having a big lockdown.
Okay. In view of that, I'd like to move on perhaps to another question, combining two questions. There was some mention of people being in favor of more European cooperation, if not necessarily more Europe. But also arguably experience with this group of countries who may feel themselves more different from the rest of Europe than they did before, sort of a bit separated. I think whether this may actually provoke greater regional cooperation and either formally or just informally in terms of forming alliances and when European policy is being discussed. I'm not sure who'd like to start that. Mr. Kaloyan, please. Kaloyan, please.
I can go, because this question also was to me. So thank you very much. This is quite an interesting question. What is the difference between cooperation and more Europe? I think cooperation is something, I'll say less harmonization, much more quick to do. For example, cooperation does mean if you have more masks at the beginning, but the other country does not have, you cooperate, you just provide to the other country when you are sure that you have enough stock. But what does mean more Europe? More Europe does mean more harmonization, more common rules that are applied by everybody. I'll give an example with the previous crisis, and I'll go back to the current one. So, for example, more Europe after the financial crisis is the banking union in the euro area. But when the banking union started to be drafted, to be promoted, to be elaborated, to be implemented, this was 2012. That means 3 or 4 years after the start of the banking crisis. So I also expect more Europe, but as mentioned at the beginning, I don't know what exactly will be more Europe. Just an example could be, for example, more harmonization in the health sector. That could be, but I don't expect this kind of move to be done in the next 1 or 2 years. We will see this perhaps in the next 3 or 4 years.
Others want to comment?
I'm happy to chip in. To fully agree. And the surveys which are available does show that there is very little appetite to give more powers to member states. But at the same time, the member states are very strong, and sovereignty is, as we know, very, very strong. So what comes out as a result from these surveys is that more cooperation. So we don't want more Brussels type of approach. I think that's, you know, the kind of more populist way of putting it. But coordination is being recognized as an important factor. Personally, I think that regionalization will be the major way ahead, particularly in the context of deglobalization efforts and sort of real attacks on global institutions currently.
When you say regionalization, you're not saying the regionalization of Europe, but the global regionalization.
Yeah, within sort of, as opposed to very global, so Bretton Woods institutions, more, you know, locally based, but regionally locally based institutions and coordination. Yes.
We had some questions about what are the prospects going forward, also economically. You know, we've seen some renewed growth in the number of cases in some countries, notably Serbia and a few others. It's just very early days in terms of the data. We haven't seen really what's been happening in April, May, and the cross-border effects are only just getting going. Mr. Taylor mentions also that, you know, there's relatively high manufacturing, relatively low, perhaps, consumer debt in many of these countries, where that's seen as a strength or weakness, particularly related to vulnerabilities in the banking system. So there may be some comments in this area, perhaps. May I ask Christos, perhaps, might have views upon where he sees the vulnerabilities or relative strengths.
Thank you, Daniel. I think I made that point before, and Kaloyan also mentioned that. The fact is that the banking system is entered this pandemic crisis in a much stronger position than all over the world. I mean, in the United States, in China, in Japan, in Canada, in Europe, on average, in a much stronger position than it was in 2007, 2009. There is no doubt about this. And this in terms of solvency, yeah, they have adequate capital, and in terms of liquidity. At the same time, we have seen that the volatility in capital markets has been very significant. But again, capital markets are performing on average much better up to now, yeah, than expected. Especially the technology sector, you have seen the stock prices surging at record high levels. Yeah, that means that the fundamentals of the financial system have not been damaged at this stage by the crisis. Nevertheless, there are risks which are accumulating. Yeah, and to what extent these risks will materialize and will pose a real threat to the financial stability in specific regions all over the world is an exercise on which no one can give some very solid suggestions at this period of time. Point number one, we don't know how long the current situation will last. Yeah, we don't know whether during the next, let's say, 12 months, economic recovery will be such that the real sector of the economy will warm up again. If this sluggish situation were to continue, that means that for the banking sector, for example, but also for capital markets, but let me stick for the time being in the banking sector, that means that the loans that have been provided will not be able to be repaid. Yeah, and for the time being, you have a lot of moratoria. You have implemented it, this kind of moratoria across the board. Yeah, what last year would have been a non-performing loan of Gortsos, yeah, this year is a performing loan of Gortsos because there is a freezing in the repayment periods. But this is not a party time. Yeah, this situation will find a steady state, and after a certain trigger event, which will be normalization, however you define it, yeah, the problems will emerge. And the question is how much of a stock of NPLs will have again been piled up to an extent that it would put again threats to financial stability, in the sense that you might find several credit institutions, banks, again in the verge of insolvency. This is the main problem in my view. And on the one hand, we have the banking sector and the financial system being supportive now of the real sector of the economy. But again, it may be the case that the banking system will have again to pay the price. And if you allow me, the controversy here is that obviously, on average, yeah, let's smooth it out. On average, the political system is pushing for more credit to the real sector of the economy. On the other hand, when the rainy days will come, the recapitalization will not be allowed to be provided by public funds. Yeah, and that at that time you may come up with some harsh solutions for the banking sector. So overall, I think that I'm not far away, I believe, from the point that in the years to come, in the next 2 years to come, discussions about general reshuffling of the banking system, at least in the on the European continent, will be tabled. Yeah, I believe that a lot of underlying problems, yeah, not the large ones, underlying problems, will surface again, and the NPLs, which will definitely be there, yeah, will be a trigger for some developments, which I think will have to be discussed very seriously on several roundtables, yeah, and not only.
Other reaction? Okay, Piroska?
I absolutely agree with the point on the NPLs. So a colleague of mine, I can say proudly, Tim Besley, put it in the following way, that there will be a tsunami of NPLs. That's what, tsunami of NPLs, even in the relatively well-performing countries. Of course, longer we don't have the vaccine or the treatment, the deeper this will be. But there will be tremendous amount of NPLs, is very little question. But I would say that even though we know how to go about this, the evidence, you know, the experience from the global financial crisis, this will be different. This will be different because, as Christos so eloquently explained, this will be a very, very broad, very massive potential, very massive amount, where a lot of the lending is really happening at the government direction. So it means that when this NPS gets solved, the government will have to have a much bigger role to play in handling them than in the past. So it will be not simply a regulatory issue, which not simply, I mean, quote unquote, but that was the main avenue for, and decapitalization, the governments will have to help. And therefore, whether to use public funds, if should it come to that point, or not for banking capitalization, should it come to that, I would think that there will be new innovative solutions, just as we have seen in many other areas in Europe, that Europe has grown up to the task, and the ECB has grown up. And in my view, because of the severity, like the severity of the situation, governments will be involved, and the rules will be accordingly modified.
This is, oh, sorry, Kaloyan?
I just want to touch upon two issues on one of the questions that was raised, and another one that is also in the Q&A from our colleagues. So the first one, you already mentioned about the manufacturing. I think the manufacturing, especially in car industry and some other industries, will be affected a lot. But taking into account that the manufacturing usually is 20-25% of the GDP, and about 70% of the GDP is the services sector, we should also very carefully look at the services sector as well. And there the problem is that in some sectors of services sectors, they will be extremely affected, like the tourism, for example, hair sector, also for going to the dentist, for example, but some very few sectors, for example, transport sector will of course be affected, but very few sectors will benefit from the crisis. So the overall will be very negative. The second issue that I want to touch, there was one of the questions was about social issues. There are even two questions in the chat room. One is about the social solidarity and social stability. Of course, we have spoke about a lot about financial stability, about the stability of the real economy, but I think that one of the big problems is really the social stability. And we see protests here and there for this and that, but this is just the beginning. And for me, the bigger problem is that I already mentioned a little bit in my presentation that those that are vulnerable became much vulnerable, but in social terms that may enlarge the differences between the social groups, and that could create, if it's prolonged a lot, these social differences will be much higher. And that could create not only social, but also political and even security problems if the crisis is too long. So therefore, the new measures should look very carefully also on that, not only preserving the real economy, but also look on some more on social issues, but it should be very carefully managed. And of course, there will be more unemployment, that's for sure. Thank you.
May I have a second intervention?
Of course.
Very briefly? Yeah. I wanted to take over from what Piroska said before on the resolution. Yeah. Because the resolution framework is in place. It was not there in 2007, 2009. Yeah. This is another child of the crisis. Yeah. You have crisis management. But again, the application of the resolution framework in our days is not so easy, especially when it comes to bail-in. Yeah, can you imagine nowadays bailing in the deposits of companies over 100,000 euros? This would not be acceptable. You will create a second round of NPLs for those companies.
We're having trouble hearing you. Christos, I can't hear you, nor is your video working. Perhaps we can come back to you, Christos, when you're with this movement on the video screen. You may be re-entering that. We have a more sectoral question about, oh, there you are again. Yes, please.
Unmute.
Sorry. Yeah, I said that the system didn't like what I said, what it heard from the end. It didn't allow me to continue. Let me briefly conclude. Before resorting to the resolution solutions, options, I think that a lot of supervisory measures will have to be implemented. Precautionary capitalization options will have to be explored, even though this is again not a solution, because this will again be state aid, which will burden the fiscal fund. So we are entering again into a very vicious circle situation, which we thought we have overcome, and will not be the case. You cannot bail in, but at the same time, you are not allowed to bail out so much. So it's going to be very delicate how the supervisory authorities will deal with that, in cooperation with the resolution authorities and with governments. The role of governments on this field will again be extremely important.
Okay.
Thank you.
In the remaining few minutes, very quickly, we have a question about a more sectoral issue about attitudes towards the healthcare system, whether there'll be, reinforced political support for government maintenance of the healthcare system, or whether the very success in not having a complete breakdown might actually give a sense of complacency. And it comes from the UK perspective. It's also interesting, but okay. Any views? Kori?
Well, I am actually really curious to also hear Piroska's take on that, because I always kind of felt, but I don't have any proof, so this is completely a subjective view, that in our ex-socialist countries, we really, really do take for granted and assume that health should be publicly provided, while at the same time, at least in the former Yugoslavia, or at least in Serbia, increasing parts of the overall health provision had become privately funded and out-of-pocket funded. The government never made a reform in which it made it possible for the public funds to actually act as real insurance and cover regardless of who's the provider. But it created a very unhealthy synergy between the public and the private health sector, where literally the public sector got the more expensive, the more painful, the etc. complicated things, and very, very last resort of care for those who cannot pay. And the private sector would, or you even mix the services. You want to get your results faster, you go to the private sector, but you come back to the public one with often the same physician to look at the results and so on. Suddenly, the private sector was totally pushed aside. I think an opportunity to, in fact, start working together in a healthier way was missed as well. But an awareness was definitely created that, wait a minute, we've gone too far in neglecting the public health or even abusing it. The problem is that to really organize and reform, it requires certain fundamental institutional reforms. I find that the health system is the best reflection of everything that's wrong institutionally, whether it's in economics or anything else. And this lack of capacity and readiness for a certain kind of professionalism and flexibility that allows people to take responsibility for what they're doing is so evident in the health system. So although it has woken up, and these are systems that were built to reach every village with anti-infectious disease measures and so on. So I think they've managed to be successful now, even though they are so run down, especially the Serbian one. But still, reform is not, in my opinion, in the books, because it requires a completely different governance capacity.
Unfortunately, we're running out of time. It's now 17:26. But there's more to discuss, and there are also a few questions we've not had time to get to. But can I ask Charles to provide a summary of which was a possible job?
Okay, thank you, Daniel. Yes, it's hard to put together everything. There's so many interesting things. I think we had 4 really excellent presentations, and I mean diverse as well. I mean we had Christos from the ECB perspective, Piroska then the oversight of the regions, and then 2 specific cases, one in the EU and one outside the EU. I mean, one common theme I think is that everywhere there was a relatively quick and forceful response to the pandemic, and the authorities looked the benefits of seeing Italy and actually responded quite quickly to that. And we also have, I think, that there's much less global cooperation than, say, in the global financial crisis. We keep coming back to the contrast with the global crisis. But since the crisis here was universal and everyone is putting forward similar issues, similar policy responses, therefore there is overspill and the region is moving in the same direction. We have the US Fed is producing, therefore, basically worldwide lender of last resort services. The ECB with its new innovative repos across the region, that's much broader and much more rapid than what they eventually reached, a long way into the global financial crisis. So the monetary authorities have been much more forceful and innovative and really understand the instruments, and that's been good. In addition, it isn't entirely monetary, again, unlike the global financial crisis, and there's been strong stimuli on the fiscal side from everywhere. And some of it is cosmetic, but some of it is immediate. And again, there's overspill, there's spill across from various countries there. The result of that, it seems that it's recognized that so far, the countries of the region have had a successful handling of the pandemic. It's strengthened initial public support for the leaders. Piroska showed us with Viktor Orban in Hungary. And we may see it on Sunday when President Duda is seeking re-election as to whether it's the same in Poland. However, as Kori showed us, I mean, this popularity may not be very long lasting beyond an election. If you abused your power, and you find there's the reopening, the reclosing, and again storming Belgrade, shortly after the election. So we have to see how long term this popularity lasts. I make a few more additional remarks from this. I mean, one is really the extent of the dichotomy between the results in old Europe. I call old Europe, I call the EU countries which were in the EU before 2000, and New Europe is sort of everybody else, as well as Greece historically, because Greece has sort of performed very much like the other countries we're talking to today. And this extraordinary difference in the mortality rate, and that if you take from the old Europe, the median mortality rate, the Netherlands, the median country, had 353 deaths per million as of 2 days ago. And I am being cut out already, which is fine. And on the other side, you have on the New Europe, you have the Czech Republic with only 33. So there's a tenfold difference. It's not just somewhat better, but a tenfold difference between the old Europe and the New Europe, which is really is dramatic. And one way I just come into this with about 2 major points is the way in which EU support is distributed, which I think is going to be quite important for how there's reaction to the EU and so on. The traditional EU way is this sort of conventional key, which largely promotes convergence. So much of the money goes to the new European countries, and as Piroska said, a lot has gone to Poland and Hungary. And the corollary is not much has gone to those directly affected. Now, there are lots of EU institutions and agencies. There's different schemes. There's the ESM, which will make it differently. And again, to find, though, a coda which can distribute the forces, the funds to where they really most should go is difficult. And here I come to the statistics point, which several people had said, is that the numbers are really questionable. And are you really going to give it to those which record the highest? It may just be have the best data. I mean, Belgium has recorded the worst mortality rate. Is it just, you know, so how does this go? And I think one priority is to get cross-country consistent integral data so that one can make empirical judgments, which must be better, the analysis. Now, the final point to come in really is the importance of buffers. I think that which has been raised, particularly in the context of NPLs. The banks are doing well now. They've done a lot of work, that the banks are in a stronger situation now, but may not be strong enough because there's going to be a tsunami of non-performing loans as we go forward. And you know, maybe the reforms which have been undertaken will be enough, but maybe not. Maybe one needs to rethink. And then let's come also onto the fiscal side. And I could just coming in parenthetically, some of the South European countries and Southeast European countries, which are tourist destinations, have actually been particularly hardly affected and are particularly hard pressed to reopen in a way that maybe the politicians override the experts. And it would be a super tragedy if this reopening now because of economic necessity and so on actually means that the unresolved COVID of the north comes down to some place in the southeast, and that we do see a second wave there. And then we see again that in many countries in Central Eastern Europe, and Piroska showed us this, have fiscal space. If the debt ratio goes up 20 percentage points, it's handleable. It's painful, takes some time, but there are some countries where it's not possible. There's some countries where they're already at the limit of fiscal viability. And if there's an increase there, especially if there's an import of the pandemic from the north, then that will be devastating. And again, I think that the final lesson there is that one should have completed all the cleanups from the global financial crisis, whether it was the banking, whether it's the debt, before one actually adds to it in this stage. Thank you.
Okay, thank you, Charles. And let me thank once more our very well-informed, insightful, and clear panelists, Piroska, Kori, Christos, and Kaloyan. And also very much thank our attendees from far and wide. We appreciate their listening in and for their good questions. And remind you that there will be a blog for this event, and I think a recording on the UPEP website. You're encouraged to take a look at that. And finally, we look forward to continuing the dialogue on this and related topics in the fall after a brief summer break from St. Antony's, but we will resume with more seminars and more dialogue and more discussion. There will still be plenty to talk about then. So again, thank you and good afternoon.